Joining us now is Wells Fargo Head of Equity Strategy, Christopher Harvey. Chris, you mentioned strategy as one of the reasons why.
Yep.
Steve just talked about some of the sentiment out there with regard to people feeling even more robust and confident about their jobs,
right.
Home price expectations on the rise. How does it reconcile in your mind?
Well, that's the problem.
Or does it?
It reconciles like this. Now everything is good. You have some of my peers who are super bearish now turning bullish. You have everyone feeling good about the market. You have everyone feeling good about the economy. And that's not great because it's already reflected in things. We're going to get some potentially bad macro news from on student loan and student loan forgiveness. We may have a little bit of a choppy pre-announcement season, and things are overextended at this point in time. So I think it's time for a little bit of a pullback. And that good news, I think, is bad news. Or that good sentiment, I think it's bad sentiment.
But how exactly then, from a strategy standpoint, do you look at a market that is a stone's throw away from record highs?
Right.
In many cases, have seen record highs for individual stock members of those particular indices.
Yep.
And what appears to be, at least in the last, call it a couple of weeks, a more broadening out of some of the participation beyond some of the mega cap tech and media names out there.
So, Dom, let's talk about the broadening out. The broadening out makes sense to us. So you had small caps, you had growth, you had mid cap and mid cap growth oversold, and that's beginning to bounce. If you look at Uber caps, they were overbought. They needed the pullback. They're now such a big component of the market, it's hard for them to outperform. So this reversal, this rotation makes sense to us. But the issue is, what are you playing for at this point in time? What kind of upside do you see at this point in time? And unless you see really big EPS growth from this point, it's hard to get excited about the market because we're trading at a 19, 20 times multiple. That's not cheap.
So what should investors be doing given that environment?
So I think the rotation makes sense if they should get a little bit more mid-cap. We like the mid-cap exposure more than small cap because of risk-reward. What I think they should be doing is taking maybe a little bit off the top and putting it into, you can put things into the front end of the curve and make a decent rate of return, and just being a little less risky, right? You want to be a little bit more conservative at this point in time because everything feels a little bit too good. Everything's priced pretty healthily. And at that point, usually things turn, and we'll see a bit of a risk-off or a pullback.
Are there any, before we let you go, are there any more clear-cut signs that you're seeing, whether it be in credit markets, whether it be in some of the harder economic data, that lend you to believe that there is... I only ask this, Chris, because people have been calling for a recession for the better part of a year now that hasn't really materialized, and now people feel even more confident about their jobs than they have over the course of the last year. What's going to give here?
So we haven't been calling for a recession. What we've been saying is an economic malaise, and that's what it appears to be. The consumer's still okay. Corporations still have money. But how are you going to price that? The S&P is up double digits year to date, and it's less than 6 months into the year. Unless we're going to get a massive recovery at this point in time, how do you keep that trend going? I don't think you can. And so at this point, it doesn't matter whether in an economic malaise. I think we can agree a recession is not in the cards in the near term, but really, how are equities priced? How is risk priced? And I think it's priced just a little. I think it's got ahead of itself, and it needs to come in a little bit.
And really quickly, what's your S&P 500 target for year end?
So our S&P price target is 4,200, so we're a bit below the market. We did think the market would bounce this year, but not this much.
All right.